Good evening, guys. It is Tuesday, February 25th, 2025. This Bathrobe business. I got some decaf coffee and I've got the news. By the way, I never tell you guys what coffee I drink. It's Octane Coffee Company. And I realized that right before I started this video. So I'll post a link in the description below. Octane Coffee Company. They don't currently have a decaf. They only have, I believe, they only have caffeinated beverages, but they have high caffeinated coffee and regular coffee. So I'll throw a link in the description below. But fantastic coffee. It's here in Utah. It's locally roasted, not grown, but roasted. And I would recommend you try it. It's a fantastic brand. So let's jump into it. So the first story I'm going to talk about is consumer sentiment. So February consumer confidence came out today, and it's below where it should be. So give me 1 second to share the screen. Okay, consumer confidence posts biggest drop since 2021 and the latest sign of slowing economy. Kind of what we've been talking about on this channel. The writing's kind of on the wall. So the Conference Board Consumers Confidence Index slipped to 98.3 for the month, down nearly 7% below the Dow Jones forecast of 102.3. So these are kind of arbitrary numbers. It's like, how do you really measure confidence? How do you really measure happiness? These are intrinsic values. But I think given the general environment, you do take this a little bit heavier than normal. We're seeing lots of companies seeing pullback. We're seeing lots of companies having negative projections for the year and for the next quarter. And so this isn't surprising. I think this is par for the course of what we're seeing. I think that these are actually independent of the Trump policies and the Trump tariffs. I know a lot of people say they're congruent and they go tandem. I think that the tariffs could actually just compound the situation. I don't necessarily think that just the Trump administration's proposal of tariffs alone is what's causing this, because a lot of this is happening even at consumer levels where tariffs wouldn't necessarily come into effect right away. Consumer products, restaurants, things like that. And let's be honest, when people go out and shop for basic goods, they're not really looking at tariffs. People go to Pizza Hut, they're not worried about the tariff price on sausage. They're just going out and ordering a pizza. Whereas we're seeing negative sales at Pizza Hut. We're seeing negative sales at Longhorn Steakhouse. We're seeing negative projections all across multiple sectors. So I think the tariffs would only compound the situation. We'll see what happens in the coming months, but I think everything is pointing to recession in 2025. Furthermore, let's talk a little bit about Bitcoin. So this kind of illustrates the fact I was talking about yesterday. Bitcoin generally moves with the market, despite everything that Bitcoin proponents will talk about, that it's a hedge against inflation, that it's a hedge against government spending and government control of monetary policy. Bitcoin moves exactly like the stock market does, and Bitcoin drops to a 3-month low below 90,000 with risk of moving lower. So now that it's a more or less a legitimized ETF, it's a legitimized financial product, it, like a lot of things, will be swung heavily by traders and by investors. A lot of these companies will have margin calls, and a lot of these companies will have short positions against the coin. So there's a chance that we could see greater drops and it regressing back to where it was pre-Trump administration. We'll see what happens in the next coming weeks, but this is definitely, I would say, a downside to what happens when you go legitimate. Before, Bitcoin kind of operated on its own rules, but now that it's being, publicly invested, it's going to succumb to a lot of the market forces as well. This is one of the reasons I'm not into crypto. This, among other things. If you do invest in crypto, I think Bitcoin or Ethereum are the only real legitimate ones out there. But now Bitcoin is going to face pressure like it never has before. Next story. This story I just find interesting. So Lucid, which according to my brother is the most underrated automobile company in the world. And I will post a link to his, in fact, I'll share it right now. So this is my brother, backseat driver. He was Swayze up until a week ago. He just changed his name. He kind of rebranded, but fantastic channel. So if you know him as Swayze, that is backseat driver. Fantastic channel. He talks a lot about automobiles. He talks about cars. In this video, he goes in depth on Lucid and how it's just a fantastic engineered car, how it's better than Tesla in every way, yet doesn't seem to get the credit that it's due. So when I saw this story, it just made me think of his channel and his videos in the description below. So Lucid is current CEO is stepping down, with plans of more than doubling their production in 2025. So they've got a new CEO coming in. There's currently just an interim CEO, and they're saying they're going to double capacity. However, I wouldn't invest in the company just yet. So vehicle production this year is only going to reach about 20,000. And I knew that was low, but I didn't really realize how low. So let me share this tab with you. So how many units of Tesla cars are sold each year? 1.81 million globally, versus 20,000. And how many are sold by, let's say, Ford, another major producer of electric vehicles? So Ford doesn't just sell electric vehicles, of course, but Ford alone sells 4.5 million vehicles globally. So Lucid's got a way to go, but I just thought this was an interesting article. I think my brother has definitely swayed me into thinking that this is a legitimate car brand. That is a fantastic company. It just has a way to grow. I just thought it was a very interesting story to talk about. Next story, NVIDIA. So NVIDIA is set to record fourth quarter earnings after the bell tomorrow. A lot of eyes are going to be on NVIDIA to show where the direction of the AI market is going. Now, this article talks a lot about what could possibly happen. Microsoft most recently has pulled back on some of the leases for its data centers. When you read some of those stories, it doesn't seem like they're undercutting their investment. It really just does seem like they're trying to be more conservative with their dollars. And especially, I think they're finding that they can do a lot more with a lot less space. So that's why some of the leases are being canceled. I think given the fact that a lot of these companies in their quarterly reports are still reporting that they're going to double down on AI, if Microsoft is saying it, Amazon is saying it, Meta is definitely saying it. Who else was a major player that recently said it? I cannot recall, but every one of them is saying it's going to double down on AI. I think overall the predictions are good. I think they're going to report strong earnings. But I think one of the primary motivators is actually going to be DeepSeek. So yesterday we talked about how China is starting its real AI boom like we did just a couple of years ago. So what 2022 was for us is, or 2023, is to China what it is now, because DeepSeek has just launched and they are purchasing chips like crazy. Now, China is purchasing NVIDIA's high-end chips on the black market. I think that's without question. When you look at when the blockade went in for when China can no longer buy NVIDIA's high-end chips, all of a sudden a lot of those chips started getting sent to Singapore. So they're going in through a back way. But even if you don't look at the black market, if you look at just the actual market of clear sales, China is buying up a ton of NVIDIA chips that they're allowed to buy, ones that are supported with DeepSeek. So they are buying up tons of this infrastructure, tons of their chips in order to build out their AI infrastructure. So I think overall, NVIDIA is going to have really good earnings tomorrow, but even better, I think they're going to have a very positive outlook for 2025. I think one of the few companies that does. Next story. The next few stories are actually in tandem. So there's a lot happening with metals and minerals. The Trump administration has kind of quietly made this a focal point of their administration. So a couple of weeks ago, we reported that Trump was planning major tariffs on steel. And I even had some of my listeners ask, what do you think is going to be the effect on Utah economy? Because we have Kennecott Copper here, a subsidiary of Rio Tinto. At the time, I reported I don't think much, because most of the tariffs were on steel and aluminum. Here in Utah, while we do have that in some amount, the primary thing we mine here is copper with small amounts of molybdenum, gold, and silver. So this now seems to be that copper may end up having tariffs. And if you actually look at the overarching policy of the Trump administration, they're making minerals a major focal point, which means they're probably going to be making EVs, electronics, AI a major focal point as well. Now, some of that isn't overt; it's quite in the public sphere, where they talk about major investments into AI, major investments into crypto, etc. But some of it is actually, I would say, a little more covert, because the Trump administration has never been one to be sympathetic to the EV market. Yet they seem to be making all the moves in order to make EVs more affordable here in the U.S. Yesterday, we reported on a story that they're trying to stabilize relations with Russia in order to gain more mineral rights. Today, the story that Trump is planning a probe into possible copper tariffs, which would potentially bolster the United States economy, mining operations. And in addition, There's the famous story that came out just a couple of weeks ago. This was more politics than business about utilizing Ukraine's mineral rights. Without getting too much into politics, this is essentially what caused the breakdown in negotiations between Trump and Zelensky. But now it seems to be back on the table because Ukraine says mineral rights deal has reached an agreement with the U.S. While it hasn't been put pen to paper, it seems like tentatively they have an agreement. So between these stories, it seems like the Trump administration is definitely positioning itself to be heavy on minerals and metals. In addition, there seems to be movement again on the Nippon Steel plan to purchase U.S. steel. So the Trump administration, and I'm sorry, the Biden administration blocked the purchase of U.S. steel by a Japanese company, Nippon Steel, just last year. I think it's silly to block a deal. I'm very much free market when it comes to these things, but they did. Trump also supported that block. However, it seems that they are going to be entering negotiations, including a possibility that Nippon Steel will buy shares of U.S. Steel, but have non-controlling interest. So in other words, they'll have the investment and they'll be able to reap those benefits, but they won't actually have control of the company. The control of the company will remain in U.S. hands. Again, another move that strategically puts the U.S. in a positive light in regards to metals and minerals. This seems to be a major, major focal point. I think it's kind of gone unnoticed by a lot of the major news outlets. Yeah, so that's that with when it comes to metals and materials. Last story I'm going to share is just kind of an interesting one. Home Depot. So Home Depot posts revenues that beat estimates. It looks like they had growth across multiple sectors. So it seems to be that the housing market might start seeing some movement. So part of this is going to be the retail aspect because retail had strong returns last two quarters, in fact. But some of this is going to be just from the fact that I think real estate is starting to move, especially one was hurricanes, two is going to be the fires in Los Angeles, and three is just we're entering the springtime where home sales really start to grow. So Home Depot posted 14.1% increase in revenue year over year to $39.7 billion. They saw growth in multiple sectors, including their professional lines like roofing, plumbing, electrical, but their e-commerce grew as well by 9%. So yeah, here it is. By sales growth of 60% of 60 basis points with higher foot traffic up to 7.6% and an uptick in the average ticket size by about 0.3%. So across the board, they were seeing very, very strong growth in store and online. We'll see what that happens with the housing market once housing seasons really start off in the spring. But so far, very positive sign for the housing market, despite the fact that I still call recession in 2025. Housing may be safe from this, seeing as how it's kind of been in a depression for the last 2 years anyway. That's pretty much it. So those are the stories of the day. I hope you guys have a productive Wednesday, and I'll see you guys back here tomorrow. Bye.